A few more moments, we're going. We got 17 people, and we're going to go. Who else? We have West Coast. We got New York. We have Central Jersey, Mama Junction. Philly. Nice. All right. We got Philadelphia. Okay. So we're going to start in one more minute, and then we're going to go with this. Okay, we got 18 people. All right. So we have Trenton. Nice. Trenton, it's an interesting market, actually. I know some investors there that they're buying up lots of single-family homes there. What other markets do we have? Okay. So let's get to it now, all right? So just first off, a little background about myself, Levine Capital. Okay, so Levine Capital was created as a way for, I was influenced from my father and really I created Levine Capital to help my father out and then also to help other investors invest with us, okay? Tay, my partner over here, he actually started out as an investor with us or with Levine Capital, and we both shared the same investment philosophies. And later on, he's now my partner. Okay, TCS Anika Homes, we have Daniel Edrei, we have Luis, we have Mike Ferrise and Joseph Puggi. Daniel Edrei is one of the managing partners, and they're actually one of the companies we invest with. Okay, we only want to invest with high quality, experienced sponsors. Okay, and this topic is a very interesting topic. Last month we talked about how single family homes is the next best thing, and now we're going to talk about technology, how it empowered single family rentals to rival multifamily at scale. Okay, Tay, you want to?
No, yeah, we've been hearing a lot about the multifamily, but single family has been relatively underexplored. So our goal today is hopefully at the end of the webinar, you'll get more informed of many aspects of single family rental homes as an investor. Yep.
Okay, perfect. All right, I'm going to shut off my camera now so we don't block the. Okay, so today's agenda, right? What we're going to be talking about here is why SFRs are the next best thing in real estate. The challenges that faced SFR relative to multifamily, technology, how it powered the evolution to really scale up the business plan of owning hundreds, if not thousands, of single-family homes or single-family rentals. And really, we're going to dive in deeper into technology. Technology is a huge factor of why this business plan is scalable. Okay, and then at the end, we're going to leave it open for a Q&A.
Okay, so yeah, before diving into the world of single-family rentals, I think it may be worth getting the lay of the land. So yeah, let's take a 30,000-foot view of the SFR first. This chart shows the total value of the U.S. housing stock is roughly $35 trillion, which makes it the world's largest asset class. So even single family, represented by the navy blue bar within U.S. housing, is much bigger than the other asset classes. So this tremendous scale of the U.S. single family market gives a lot of opportunities for real estate investors. Here's a macro view of where SFRs are standing relative to other real estate classes. The scale of the SFR market and the composition of the investor base could be important factors when assessing the potential opportunity. So the value of a single family rental is estimated to be north of $3 trillion, a little lower than multifamily, but larger than other sectors. So, and on the right chart, if you break down the different types of multifamily buildings, SFRs are bigger in number than the various subtypes. So SFRs make up 17% of about 93 million single-family homes and 35% of all rentals. And almost 90% of investors hold fewer than 10 single-family homes in their portfolio, which means institutional investors still remain tiny player in the SFR market, owning only 2% of SFRs out there. On the other hand, for multifamily apartments, 55% is owned by institutions today. So SFR is emerging relatively recently as an institutional asset class. For a very long time, the majority of SFR transaction took place between end consumer, SFR 1.0, so to speak. Then post-financial crisis, for the first time in history, large institutional investors emerged and acquired a great number of foreclosed properties, entering into kind of SFR 2.0. Now, Adam is going to walk us through the historical backdrop and the parallel between multi and single family in the way of becoming institutionalized.
Okay, so the making of an asset class. What's really interesting is I was fascinated about how this happened, and I wanted to dive deep into the history, okay? So let's go back to the 1980s. This is the deregulation of the small banks. I mean, this is how the S&L crisis happened, is deregulation. And usually what happens is there's always some type of deregulation with lending, okay? There's a boom, an asset boom, a bubble and a bust, and then a bailout. And that's what really happened, okay? The 90s, 10 years later, this is when the bubble basically it bursted. And this is when multifamily became institutionalized, all right? Before the 90s, there really was very small institutional players investing in real estate. And this is really where multifamily got its legs, okay? And as you see here, it's always some type of, like I said, a bubble. There's always deregulation, bubble. There's an asset bubble, a boom, a bust. And then there's the government bailout, and then investors, they always come and save the day, okay? And yeah, that's then a decade later, it happened again. You went from the 80s, 20 years later, and that's how SFR 2.0 happened, where it went from multifamily in the 90s, and then 2008, that's when the housing crash happened, okay? Everybody probably seen the movie The Big Short. I hope most people saw that. This is again deregulation with banks, okay, in the 90s, and 2008 it came. The House of Cards collapsed. We had the foreclosure crisis, and then in 2012 there's government intervention with a pilot program. That's when really there's a free fall. When the bubble popped, there's a free fall with single family homes, and then the government incentivized to basically they wanted to stabilize the market, so they created a solution for investors to buy up single family homes. And what's interesting is you have the famous Sam Zell, veteran investor, okay? He said this: I don't know how anybody could monitor thousands of houses. Then you had Warren Buffett that said, if I had a way of buying a couple 100,000 single family homes, if I had a way to manage them, I would load up on them, okay? And what's interesting is it happened. Large institutional investors, they professionalized this sector through 2011 to 2012. That's when the market stabilized, okay? And that's really how SFR 2.0 happened. And then we go into SFR 3.0. And hey, you could touch on this now.
Okay. Yeah, as we discussed, the evolution of the SFR market has been remarkable since the financial crisis, and SFR has proven to be a viable institutional asset class. Apparently, several fundamental factors in favor of SFRs grabbed the attention of institutional investors. Largely speaking, these pertain to financial aspects, demographic trends, and increased demand for bigger space, both indoor and outdoor. In this chart, you see the median house sale price is pretty much trending up and up between 2008 and 2020. Lately, this upward trend is fueled by historically low inventory and mortgage interest rates. So this seemingly ever-increasing home value puts home buying out of reach for some people and pushes some would-be home buyer into renting instead.
Where's that I sound?
Yeah, I can hear you. Yeah. Student loan debt looks more concerning as shown in this linear upward trend. Student loan debt nationally shot up from roughly $250 billion in 2003 to close to $1.3 trillion in 2016. More than a fivefold. That's really a staggering increase. And this mounting level of debt is pressuring down on especially younger borrowers. These college age groups are approaching the prime home buying age, but unfortunately, many of them have retreated from mortgage borrowing because of this financial burden. Tight mortgage credit is also to blame for less home ownership these days. Mortgage lending standards, as we all know, have been tighter since the financial crisis. Among all mortgage originations, you can see in this table, median FICO score, the top line, has remained above 750. So roughly speaking, these are 35 to 50 points higher than back in the 90s and the early 2000s, which are considered the more reasonable underwriting periods, if you will. Unfortunately, the number of people don't have the qualifying credit score, and some consumers are even no longer potential participant in the market. So limited access to mortgage credit has made renting an affordable solution for many consumers. It's worth noting millennials who were born between 1980 and 1996 became the largest age group, 87 million people, give or take. So, and they are likely to have a huge influence on housing demand down the road. And these young people tend to get married at older age these days. And this trend could delay home buying and will contribute to keep households in renting for extended periods. And at the same time, we literally live in a renter nation. So we are seeing the growing popularity of leasing just about anything, like from car or to appliances and to even clothing these days. So millennials, in a way, may be more comfortable with the idea of renting, and the flexibility comes with.
Yeah, and what's interesting is it's not renting by forced renting; it's renting by choice. Okay, and that's really what's happening now. This is really a huge factor of why. And another thing that's interesting is COVID. I mean, people, if you see what's happening, people are fleeing in droves, New York City or urban, and they want to come to the suburbs because you have more space and they want extra room to work from home. Okay. And that's really, if anything, this was happening before this COVID, this pandemic, but now it's really moving things at a very fast pace where it's really moving fast, where now you're seeing a more of a shift from urban to the suburbs.
Yeah, exactly. The COVID really accelerated the kind of existing trend underway, right? Yep. And on this page, overall, the number of households has grown steadily on the left chart. However, the proportion of owner-occupied versus rental households have been flipped since the financial crisis. and renters will dominate new household formation in the future to come. And this forecast really tells another 6 to 9 million new rental household in the next 10 to 15 years. As millennial renters age and grow their families, the increased demand for space is really inevitable, and they naturally gravitate toward a more suburban lifestyle. So if you look at the right chart, the vast majority of multifamily properties have 2 bedrooms or less. So multifamily may not provide sufficient space for those who need it. So in order to move into larger places, they may need to look for single-family homes. But then because of that or other financial constraints, their option may switch over to SFRs altogether. So also as family grow, changing preferences for better schools and family-oriented community could also drive rental demand into SFR rather than multifamily.
And another interesting thing that I wanted to mention too is that generally with multifamily, the leases, let's say they're 12 months, they're short leases, and the tenants will stay, let's say 6 to 12 months. With single family, they'll stay an average of 2 to 3 years. So you have less lease turnover. And and obviously the more space that helps. You have families, they want to start, they want an extra, bedroom. Now you need a home office. So now you even need more space. So these are things that are playing a really big, impact of why single family homes is more appealing to as a rental.
Yeah, exactly. Yeah. So all of these factors we mentioned, I considered. You can see the growing popularity and demand for SFR here. So I just want to point out that SFR is both the largest and the fastest growing segment of the rental market. So SFR has grown by more or less 5 million rental units over the last decade. By comparison, institutional multifamily increased by 1.7 million.
And what's interesting too is that this is only 0.2% owned by institutional investors. So there's a lot more room for growth. And that is another driving factor for why investors want to enter the SFR spaces, because there's 0.2%, if you think about it, if you want to talk numbers, that's a very small percentage of ownership.
The comparison with the multifamily, there's a world of difference, and then there's a lot room to grow in the SFR sector. And also, as you can see is here, institutional investor really get into this SFR market. They can really benefit from the economy scale. They can buy a lot of construction material in bulk, so it can reduce the per unit costs. And the capital market has been improved significantly. So they're now embracing the SFR investment. So there's more liquidity is available, and there's a more of appropriate the lending available for this SFR investment. And most importantly, there's a huge technological advances. So the technology plays a key role in the takeoff of the SFR sector.
Yeah, and another thing is, so just to shine some more light on this, all right? There are institutional investors such as Amherst Residential, right? They own 16,000 homes. They want to own over 1 million of these homes over the next 15 years. And this is conceivable due to the technological advances that are helping these investors profit along the way. And what's interesting too is that Rockpoint Group, they had the opportunity to enter this space a decade ago. They passed due to the uncertainties around scalability. Since then, changes in technology have made this business plan feasible. Technology offers web-based platforms to help make things easier, to manage leases and manage large collections of rents for the properties. And TCS, who's our special guest on here, they recognize the scalability of SFR, and they plan on owning thousands of these, along with small multifamily homes, with the goal of eventually opening up a REIT similar to Invitation Homes. Okay. And yeah, so this is it's very, very exciting. And for investors that are active, this is an opportunity, or even passive investors. So, and I see a lot of people commenting. Feel free to list your questions. We appreciate that. And we're gonna, at the end, we're gonna go over all of this to a Q&A.
Okay, so managing thousands of individual homes is more difficult than a single apartment building. Which is why the single family sector did not institutionalize earlier. And technology is now being used to help solve this problem. And institutional investment managers have built requisite technology that enable them to manage large portfolios of individual homes. So the SFR margins is really catching up as the level of scalability is slowly converging with the multifamily level. So it's really trending up, and then there's still a gap between the multifamily SFR and with the aid of this technology, we expect the operating margin gap to be narrower. But still, this improvement, the SFR operating margin will likely remain somewhat below multifamily levels because of this inherent challenges. But it's becoming more scalable. Yeah.
Yeah, and just to highlight more, a lot of things that are considered a higher cost is the maintenance, property management, acquisition, due diligence, renovation, and marketing. And with the use of technology, it, like what Tay said, it's cutting down on the cost, which is improving our profit margins. And this is something that investors thought wasn't feasible. And it's already been proven from a decade ago to now. That's already been proven. And now now it's only getting better. Okay. And here are some of the tech trends. Okay. We, as you see here in the bold, you have big data analytics, you have the artificial intelligence, machine learning, virtual augmented reality, blockchain. I mean, people probably know, Bitcoin, and you have the iBuyers, the cloud, 5G, drones. These are all things that are contributing to the success of real estate as a whole. But this is really making a dramatic difference, especially in the single family arena.
Yeah, so the clearly technology touches every aspect of the real estate industry today and has really shaped the takeoff of the SFR industry in particular. So we list out several tech trends developing in the real estate world these days. And out of all of this, we're gonna hit on a few handful in bold in the following pages. Yeah, okay, so still in an early growing phase, but artificial intelligence really combined with machine learning and big data is very likely to have a huge impact on real estate in the future. And there are so many potential benefits from using this innovative technology. Since AI has the ability to analyze patterns in vast amounts of data, it can be used to make reasonable predictions of the future value of a property. So, for example, an AI algorithm can combine current market data and CRM and also public information, such as transportation options, crime rates, or school districts, and even noise levels, you name it. The number of property attributes or market data points can exceed tens of thousands. which is too complex for the human analyst. But if you use AI to anticipate rent and sale price fluctuation, or even identify the perfect selling timing, it'll really give you a tremendous competitive advantage.
Yeah, and single family rentals, it's basically a big information game. Okay, you collect all kinds of information when you buy at scale, and this data gives you a competitive advantage. That's what it's really doing. And what's happening now is there's a lot of vendors that offer these solutions, and then you also have private equity firms they're creating their own proprietary methods as well. And if anything, it's the technology, AI it's taking over the world, and if anything, it's only going to get better here on out.
Yeah, exactly. As you can imagine, AI can be a complete game changer and give you an edge in terms of efficiency and accuracy. Yeah, and the potential benefits seems really limitless. Yeah.
Okay.
Oh yeah, virtual reality and augmented reality also will make the online search and home buying experience really exciting and accessible to many people. So one of the most important steps of buying a property or becoming a tenant is really viewing the property inside and out. But sometimes this can be difficult if you're moving to a distant city, or if you're otherwise unavailable during normal viewing hours. In that case, virtual reality could easily allow prospective tenants and home buyers to walk through properties before making decisions. And also, the staging is a great way to increase the perceived value of a property, but it can be heavy expense. And thanks to the augmented reality taking off, you can virtually stage a property by digitally adding furniture and accessory to interior photos.
Yeah, and this is also, this is something that really took off during these COVID times. There's virtual showings happen. It's unbelievable. Like, for example, you could just show a house virtually and never have to go there, physically be there. You have the landlord that doesn't have to be there, and the potential tenant. And this is something that's happening today. And if anything, it's gonna get even, it's only gonna get better. And who knows? I can't imagine a decade from now, virtual reality, probably not even gonna need those VR goggles. Who knows, what we're gonna have then, but I'm sure it's gonna be a lot better. Okay, so here's blockchain. What's just a real high level view. Blockchain is something that it's in its nascent stage, and what's going to happen is it's just, this is going to take some time to develop. It's, everybody's probably heard of Bitcoin, but it's really the technology that is really exciting. And it makes everything transparent. So what this is going to do is it's going to create ways to buy and sell property a lot faster. So one thing you have to realize, real estate's very slow in technology, and now it's starting to really catch up. And blockchain it's really going to disrupt everything. You're going to be able to own fractional ownership in homes and be able to really, it creates more liquidity, automated legal agreements. Eventually, you're not going to need third-party servicers such as like attorneys. You're not going to need them anymore. You're not going to need title companies anymore, because everything's going to be reported, and it's really going to speed up the process. So really, everything's going to be efficient. It's not going to take forever to close a house. It could be instantaneously once this comes into play. Okay, here we go. Now, I want to introduce one of the managing partners, Daniel Edrei, and his team. And now they're going to go deep into their methods of what they're doing. And just so everybody knows, Daniel Edrei is one of the managing partners of TCS Anika Homes. And we have Mike Ferrise, who is construction management. We have Joseph Puggi, property management. And then we have Luis with acquisition and due diligence. And here we go. Here's Daniel Edrei.
Thanks, Adam. As Adam said, I'm Daniel Edrei. I'm the managing partner of TCS Anika Homes. We started TCS Anika Homes a couple of years ago. I've been about 30 years involved in commercial real estate as an investor, as a lender, as a developer, as an owner, etc. I really, I had the opportunity years ago to invest in SFR, and my concern was its ability to be scaled. And interestingly enough, a couple of years ago, I moved to Philadelphia and I met Ben Aller and Gaurav Gambhir, my partners. They had TCS Investments, which had done hundreds of renovations of SFR for third-party clients, and TCS Management, which is the largest scattered site management company in Philadelphia with over 3,500 units under management and growing very quickly. I had some partners that were really baked in the infrastructure and saw the ability to take this business and really blow it up into something that could be institutional and eventually get to the point of, having thousands of units and hopefully, going public at some point. TCS Anika Homes buys SFR. Right now, we're focused in Philadelphia and within kind of concentric circles of about 30 to 45 minutes. Soon, we're likely to expand into other markets. We've launched 3 funds to date, and we're launching our 4th fund and exponentially growing at this point. By necessity, we're going to have to go into some other markets soon. We invest in affordable housing, in workforce housing. What we're creating is a very high quality product for a lower demographic. It's an asset class and a demographic that we feel is to some degree recession proof. And that when there's volatility in the markets, in the world, that this particular segment of the population and of SFR asset class does really well. So that's why we're investing in this, and we believe we can grow it very large. To start off with, let me introduce you to Luis Aste, who's our Director of Acquisitions, and he's going to talk to you a little bit about acquisitions.
Thanks, Daniel. Thanks for the introduction. I just want to also say thank you to Tay and Adam for having the TCS family here and being loyal investors. So I'm just going to go over a few slides of, typically where I think we can kind of create more efficiencies, and hopefully as we scale, we can become more efficient in our systems and processes. So if you look at this page right here, this is just a screenshot of the MLS, and this is in its map view. So for those of you that don't know what the MLS is, it stands for the Multiple Listing Service. And it's basically just a huge database where all real estate agents and brokerages have access to, and they can kind of see what transactions are going on within the market in a specific geographical location. So the MLS it's a treasure trove of information. But when you have so much information, it could really be overwhelming. And you might not be as efficient as possible. So as we're looking to scale into our into our 4th or 5th fund, next year we're planning to doing on 400 units, which means that we're going to have to increase our pipeline substantially, and we have to close on much more units substantially. So one of the ideas that we're starting to put in motion is to hire virtual assistants. So what we would use the VAs for is basically to scrub through all this data here. So you'll see lists of properties here. And if you go in, each listing has the information of real estate agents and the brokerage that they're associated with and all of their contact info. So instead of having me go around and, scrub all this information, call everyone, follow up, do the analysis, handle everything else, the VA can kind of come in and based on our investment criteria, they can download all this information themselves, the list with the phone numbers, emails, everything, and they can start calling constantly, every single day, every single month. And we're hoping to hit, hopefully hundreds, if not thousands of phone calls every single month. And that consistent stream of just calling is just going to increase our pipeline so much. And it doesn't really take that much effort on our end. All I have to do, for example, just give them our investment criteria. And just here's our few highlights. It's usually like a typical 3-bed, 1-bath. The price is under usually 100K within a 30-minute drive of Philadelphia, and we have to add value. We're not looking for anything that's already been renovated or stabilized. So with that knowledge, they can easily go out and talk to agents and get in front of them. And just by saying the name TCS Anika Homes, more and more agents are going to hear about us. And eventually they're going to flow to me. The ones that are more motivated, the ones that have packages or portfolios, because that's what we're focusing on especially. And they're going to come to me, and then I can kind of go in and have these leads in hand and start analyzing and kind of just start moving much more quickly because I'm not spending the actual physical time of calling everyone. So that's something that we're definitely looking into and that we're probably going to do next year for sure. But the thing about the MLS is great, but it is also limited to the state you're in, or depending on where you live in the country, you might have access to a couple of the surrounding states. But if we want to really expand this thing, and like Daniel said earlier, buy thousands of units throughout the country, we're going to need the MLS data for all 50 states. So we did a little bit of research, and we're looking into this software company called House Canary. And what they do is that they basically aggregate all the data from the MLS from all 50 states, and they put it under one roof. So that way, we don't need to have individual agents in every single state kind of working for us or giving us their login information or whatever it may be. We can have a one-stop shop for all of the data that we need. And there's also cool additional features that could be helpful as we're expanding into unknown markets that we're just not as familiar with, of course, since we've only been in Philadelphia for the most part. For example, there's heating maps. So these heating maps are really cool because you'll see that it's color coded and you'll see kind of the median or average price range dependent on certain neighborhoods, which, if we're looking at areas in Detroit, it's extremely important because you can be in one neighborhood that's very valuable and that's growing and move maybe a couple miles east or west or south and be somewhere that you definitely don't want to invest in. So that's something that we're probably going to bring online as soon as Philadelphia is saturated and we need to kind of move outward. And Housing Canary also actually has a calculator too, which can help you with the analysis of the properties. For us though, right now, mainly it's the data set that's the most important because we found the calculator not to be too exact right now. I'm sure as time goes by, it'll get better. But for sure, the value there is the access to the data. So once we're, this part's kind of always tedious. Once you get past all the numbers and you're sure that this is something that financially makes sense for you, whether it's a property portfolio, whatever it is. In Philadelphia, I always kind of go through the city websites just to make sure all the information is in line. And so what I mean by that is, for example, you see here, the owner's information is 1432 South Spadgett Street, LLC. So I'll go and I'll verify that with the MLS and I'll verify that with the agent, with the seller to make sure we're all on the same page because there are times where the names don't always match up. There could be a long story, maybe a death in a family, whatever it may be. And I do all this so I'm just not wasting my time chasing my tail on a deal that is just never going to close. And the additional cool information here too is that it tells you when the property was last sold and for how much. So this is just good to have because, you never know. If someone recently just bought a property 5 years ago and they're trying to sell it for like 3 times what it's worth today, there could be some, leverage there, just knowing how much profit they're going to make. And if they're going to make a ton of profit, then maybe like you can be more aggressive on how low your offer is going to be, or if they bought it close to what you're going to offer, you're going to just offer your max offer right away. And again, bringing a VA onto this would be key and save a ton of time, because this is all kind of just tedious stuff. But if he goes in, he verifies everything with everyone, and if he sees there's a match or there's not something that's not, if we might have to allocate a certain portion of our construction budget to fix something, or really more important, what I'm looking for is if there's like a key ticker that says ID, which stands for imminently dangerous. That's a huge red flag, because what that means is that the city has that property on watch because it's extremely distressed and their options or whatever it may be. The VA can kind of come in and scan all this information for me first. And so I know once I analyze a property that the VA is giving me, I know that it's gone through all the tests to make sure there's no fraud, to make sure there's no serious violations, and that it's kind of ready to go. And once the analysis is complete, I can make an offer as quickly as possible, and which is going to be important because time is money. And that kind of pretty much sums up everything that we're looking to do to make things more efficient here at TCS as we kind of expand. Currently, we're working on a 50-unit fund. Next year, we're looking to do 400 units. So we're definitely starting to think about how we're going to scale and how we're going to make sure that no one's time is wasted. And on that note, I'm going to pass you over to Mike. Mike is our project manager for all of our construction in Philadelphia. And he's going to take you through the same journey through all the software and systems we use to make sure everything's on track.
Yeah, thanks, Luis. My name is Mike Ferrise, and I am the construction manager with TCS Anika Homes. Right now, we're currently utilizing a software called BuilderTrend. And from my experience being with TCS for the past few years, we used to use multiple systems and databases to really store and manage all the information as we transition from Luis closing on the property till we turn it over to management. So one of the really nice things with BuilderTrend, as I walk you through these slides, you'll be able to see how we're able to really use all the resources that I need to manage a project under one system. So the first step in doing that is that I need to create a budget and an estimate for what I think the renovation is going to cost. So what we've done over time is we've developed different standards of what we think the renovation will be, which helps make things a little more predictable when Luis is analyzing those deals as he goes through the process of closing and they transition their way over to me. So I can go into each individual property. I can see what we estimated all the different construction task items to be. And from there, what I'll do is I'll create a schedule for each step of the project for every property that we have going on. And one of the really nice features that BuilderTrend has is that at any given time, whether it be a day, a week, a month, or whatever your time frame is, you can get a really clear snapshot of where the different phases of construction you are for each given project. And why that becomes so beneficial to someone like me is that you can really predict and see where any pinch points or bottlenecks are going to be in terms of scheduling your subs or potentially ordering material. By being able to see this in the future, it allows me to not wait until I'm at that time and then you get caught scrambling and potentially setting yourself up for delays. And what you can see by the screenshot is what it'll allow you to do is take each contractor by trade and you can color code them so you can see where you are at each project, given the trades and the contractor, so that you can make sure that everything's scheduled appropriately. And two, that you're not spreading a contractor too thin at any given point in time, because at this point, you know their capabilities and what they can handle and what they can't handle. And on the next slide that I'll show you here, piggybacking off the scheduling features, I can take any individual project, look at that schedule and break it into a Gantt chart. And why that becomes really beneficial is that when you set these projects before the construction starts, putting into the Gantt chart allows you to set its critical path, which essentially is going to show you how you start a project and get to completion. It will, by following the critical path, it will not let you leapfrog any one construction task item until one's completed. So I know if I have a delay due to weather issues like we're having in Philadelphia right now where we're having snow, and if that's going to delay maybe a material order, I can immediately see the impact that that's going to have on the rest of the schedule for that job, and more importantly, the other trades. So it allows me to start making those calls now and rerouting guys so that we can be as efficient as possible in getting to the end of the job, and I can appropriately move around the subs so that we don't start overlapping, and that I can still finish our projects on time even when we run into issues midstream. The next slide here, where the value builder trend of kind of keeping everything into one system, is it gives me the ability to manage the financing side of our projects as well. So with our vendors, if it's anything from material orders and POs, I can track and pay for those orders, as well as our contractors can submit their invoicing. And all that information is housed in one spot, which saves us a lot of time of just all the paperwork that we used to deal with previous to having these systems, and going through and reconciling all the balances, make sure the projects are on budget, that all the material work orders that have came in are being assigned to the appropriate projects. We can now do all that in one location, which just makes us a lot more efficient and makes it a lot easier for me to close out a project, because I can reconcile the balance. I know we have no more payables or expenses, and then I can transition it. I can transition off. The other neat feature with Builder Trend is that it also supplies not only us as members of the company, but our contractors. It has a mobile app that we both have access to. So what it's going to allow us to do on more of that day-to-day basis, when we want to go out into the field and check in on our projects, see the progress, it'll allow us to set up a to-do list, things for our upcoming schedule, make notes on a daily log. Like I said, just mentioning the weather that we're having now, so that when I want to look back on a particular project and say, hey, what went wrong on Wednesday the 16th, it allows me to make notes in there. It actually tracks the weather. It lets you know what things are going on for that particular day and why they potentially had an impact on what you had scheduled. It also has a feature that allows me to take photos and upload them, so that we can not only keep notes on a project, but keep a catalog of photos, so you can see the progress of any given project from beginning to end. And this is information that not only I can take if I'm in the field checking on projects myself, but we're able to set up access for our subcontractors that they will be able to send us this information as well, which again allows us to be more efficient and run leaner, that we don't have to build out such a massive team, because utilizing this technology allows us to manage multiple projects and scale that with having resources like this. And by using these, like I said, it allows us to get from the beginning to the projected end of a project more consistently. And once we do that, that's when I'm able to turn it over to our management team. And that's where I'll transition off over to Joe Puggi, who handles everything from the marketing and leasing side of the projects.
Thanks, Mike. Thank Adam and Tay for inviting us on as well. So as Daniel had briefly touched on and Mike had done the introduction, my name is Joseph Puggi. The Director of Business Development with TCS Management, which we are also the property management partner of TCS Anika Homes. So TCS Management manages roughly 3,500 plus scattered site units throughout the Philadelphia region. So that's Philadelphia, the surrounding suburbs, southern New Jersey, northern Delaware, and expanding. So what's really helped us be able to scale exponentially is our software. So we use a software called Appfolio. So on this slide here, you can see just, the basic functions that help us scale on such a level and keep everything organized. From posting, available units with one click of a button, it'll syndicate it to over 40 websites to market the property. We can screen tenants real time and have them submit applications while we're even talking to them. We can have the leases drawn up, submitted online, electronic signatures on both ends, and that's it. Rent payments, we've streamlined it. It's just online. You can do e-check right through the tenant portal. Automating late fees. So to keep residents in line, the pay, rent's always doing the first. They obviously have their grace period, but at the same time, to keep those functions in play instead of going one by one, it's just one click of a button and it'll automatically generate any fees we need to implement. The biggest thing, and Anika Homes and all our other owners look into this as well, and including on day-to-day management, is accounting. There's an infinite amount of accounting reports. You slice and dice every which way you want to look at it. And then, what ties in with Mike and the project management team when they bring it over is, online maintenance requests. And the big thing too is mobile inspections, pre-marketing inspections. So when the unit, comes over, we want to make sure it's rent ready for the next potential resident that's going to be living in that property. So at any given time, when you log into Appfolio, this is what we see. So this is just an example of just the portfolio as a whole. So at any given time, we can go in and run any type of report we would like to do at any single time. It helps us analyze our property management company as well. So we can run in and do business metrics too and see what efficiencies we're running at on a day-to-day basis to help, service our residents at a high level and our clients as well. So here's an example of detailed reporting. So this is what a lot of our owners like to look at. This is a small sample size of a 12-month cash flow report. So with this, as you can see here, this is just a line item of a single property. You can see the rent income per month, see your income versus your expenses, and all the numbers in blue. You can actually click on those numbers and it'll dive deeper into what that number is made up of. So you could run this for funds, owners, portfolios, or even single properties. So it's very, very customizable. And like I said, what kind of streamlines everything for the resident, the biggest thing is collecting rent in a timely manner. So they'll have an online portal as well. They could do it right online on the computer, and they even have a mobile app. So you can pay rent online. Any and all communication online as well. Keeps everything organized. A big thing too is maintenance. They can submit maintenance requests immediately, upload pictures, so we can triage over the phone first, and make sure that we're protecting, not only to keep it livable and a pleasurable experience for the resident, but also want to protect the asset as well. Which again, ties into another report, which we can communicate with Mike and the TCS Anika team or any other of our investors to see, what are kind of the common maintenance problems you may or may not see, and just try and be, have the appropriate preventative maintenance going forward so we can try and eliminate some of these problems. So with that, I'm going to bring it back to Daniel Edrei, the operating partner at TCS Anika Homes.
Hello again. So lastly, one other thing to talk about before I turn it back over to Adam and Tay is investment management. So we use Appfolio's investment management software. We have multiple different funds over different portfolios with representing different investors. And by utilizing Appfolio's investment management software, it gives us the ability to see both the congregate and the individual as far as performance, as far as metrics, so we know how we're doing at all times. In addition, it allows us to have a portal for those investors for circulation of K1s, if we have signature requests, a central location for any kind of documents that we want to share, whether it be a financing or appraisals or any recent developments in our portfolios. It allows an ease in reporting. Usually we do monthly reporting on every investment, and I can do that straight from Appfolio and attach different documents to that, which will populate within the software for investors to review later if they want. And also, it's just a contact database and calendar, so that I have all of my investors in one place, and I can review, those that are especially the repeat investors. And as I'm launching a new fund, it enables me to have at my fingertips, all of my investors to be able to send materials to. So that's it for investment management. And let me hand you back to Adam and Tay. Thank you very much for listening.
Thank you. Thank you so much, Daniel, and the whole TCS team, Mike, Joseph, Luis. Thank you so much. And as you can see, everybody, that technology is evolving, and really, what's really interesting is there's a lot of information out there that wasn't available a decade ago, and there's so many tools at your fingertips. Whereas, for example, you can go on Bigger Pockets. If you have a subscription, you go on there, they have tools on there that you use to analyze deals, and there's so much out there, and it's just getting better. Now that we're here for a Q&A, we see a lot of people interaction, and we want to open it up. So I see Mayor Meyer Siegel. How about finding single-family homes to buy direct? Luis, this is a question that's for you. Can't hear you.
Sorry about that, guys. Buying direct, it's something typically that, especially in the Philadelphia market, wholesalers definitely, that's their bread and butter. They have mass mailings that they use. They'll have phone lists of people's contact information. For us, we don't necessarily want to become a wholesaling operation, right? Because that comes with huge marketing costs, a lot of overhead, and you basically become a developer and a wholesaler at the same time. So by avoiding the sellers and going straight to the agents for scale, at least, I think works for us at this point. And we think we're going to be a lot more successful in that route, because we don't think many people are targeting the agents as much as they are with the sellers. Yeah.
Okay. What's another question that we have?
Let me interject for a second, Adam. Other thing that I would say, as far as investing direct, there's an interesting thing about investing with a fund like with TCS Anika Homes, is that you get to dilute your risk on a portfolio of properties. Whereas if you go and you buy properties direct and you manage the renovations direct and the management and so on, you'll always have one nightmare tenant or one nightmare project that goes over budget. But when you invest with a fund with an experienced sponsor like TCS Anika Homes, your risk is diluted over an entire portfolio of what might be hundreds You know, it's a lot of people watch, you know, television programs and think that that this is something that they can do and be very successful at, and learn very quickly that it's one great way of losing a lot of money in a short period of time. So thank you.
Yeah, and that's an interesting note, is that, especially a fund, for example, I could attest, Tay and I could attest, we invested in the second fund, which it's a small fund, it's 15 properties. We closed on it in March, then the shutdown happened, but we're okay. Things are delayed, but we have 15 properties that's diluting our concentration risk of just owning one property. So we still have cash flow to cover our debt service, and we have cash flow to cut, and and cost overruns, whatever. Like it all balances itself out. And there's a lot more to go into that as well. Does that answer your question, Meyer? Okay. Now let's get to the next question. What's another question we have here? Okay, sorry, I'm just scrolling through this. The blockchain. Yeah, the blockchain. That's something that it's going to be an important factor. That's definitely, because right now, for example, when you want to for acquisitions, I'm sure Luis could touch on this. There's a lot of due diligence. Title is a huge play. A lot of it is, you have to buy title insurance because of human error, right? You look at an abstract and you may miss something, so you have to buy title insurance. With blockchain, that's going to alleviate the problem of human error, where everything is transparent. The only problem is that to gather all this data, from the past to present, it's going to take an enormous amount of time. So it's going to definitely be slow to catch up, but it will be a game changer.
Yeah, exactly. So there should be really complete encryption and built-in validity checks. So buyers can submit their information on an encrypted block directly to the seller. Rather than going through a bank. So
But they're not going to need attorneys anymore. Literally, it's a lot. What's going to end up happening is technology, as you know, it's going to disrupt occupations like attorneys. They're not going to be needed. Title companies, title search is not going to be needed anymore. AI is going to basically replace jobs. It's just the reality of what's happening. And that's just it's something that's it's evolving. It's only gonna, there's a lot of pros to it, but obviously the con is jobs will be replaced. Who else has questions? This is the time to ask your questions. Does anybody have a property management question? Construction. We have Mike Ferrise on here. Okay, so I want to touch on a few things as well. What's really interesting too is that if you're looking to start investing, right? Let's say you want to be an active investor. I hear a lot of people, like, you want to start off on single family, and then eventually you're going to scale into multifamily. Well, because single family is easy to get into. What's interesting is single family, yes, it's easy to get into. But now with this technology that's available, it's making it something that used to be very difficult to something that is really making it possible and simplifying everything so you could actually scale it up. And as I mentioned before, and what you saw with Joseph and Luis and Mike, this technology is making everything it's putting everything together. Whereas, as you saw with property management, you know, you don't have to physically have a check mailed to you. Your tenants could just log in and pay, you know, and you could track performance reports and all that, especially when you're managing, you know, if you're a small landlord with, you know, a few properties, you're not going to really need all that. But when you're owning hundreds or thousands, you're going to need that. And that's what's available. That's why SFR really didn't take off until a decade ago. Okay. Yeah. So. Yeah. So Mayor Siegel wants to offer some perspective. Sure. Yeah. Absolutely. Please. Yeah. That would be great to have some.
I tried to enable him to talk, but then I got the error message that max number of presenters reached. Yeah.
Sorry about the technical. There's a technology topic, and we're having technical difficulties with Webinar Jam. But yeah, sure. If you want to, let me see if I could. Give me a second. I'm trying to broadcast. How to hear me?
Yeah, I think the thing is we reached six people.
Someone needs to leave.
Yeah, you know what? Maybe we need one of our presenters to come off, and then we could allow Meyer to enter. That's what we're probably going to need. Yeah. Just you could log out and come back in as an attendee, and then that might be a good idea to do. Can't hear you.
Is there a log out button here, or do I just X out for WebJam?
You just exit out.
Okay.
Okay. Let me see if this works. I think you're good to go now. I think Meyer, you could. Let me see. Okay, here we go. Meyer, you're on. Let me see. Did you get? I sent you an invitation to be a presenter. Did you get it? Do we have Meyer as a presenter now? Okay. Sorry for technical difficulties. All right. There's another question. In the portfolio, how are individual properties and the portfolio protected besides having insurance? That's a great question. Daniel, do you want to come on and shine light on that question?
Absolutely. So the biggest way that the portfolio is protected, other than insurance, is a very important component and always will be. But the biggest way that your portfolio is protected is by sheer numbers. In that, you know, you're always going to have some properties that go over budget. You're always going to have some tenants that are slow paying their rent. But what happens is the good properties, you know, outweigh the bad properties, you hope, if you're you know, putting in the right kind of tenants and doing your job as a project manager correctly. You know, on some projects you will be over budget, on some projects you'll be way under budget, and one goes to balance off the other. So, you know, the safety in numbers.
That's a great, exactly. And I mean, that's an excellent answer. Meyer, I sent you an invitation. I saw you said you were disconnected, and did you get the invitation? I keep on inviting you. Not sure why this isn't working, but okay. My apologies. But in the meantime, when we're trying to figure out how to get Myra on here, we'll answer some more questions. Okay. Yeah. So while we have the TC,
Adam, at this point,
I'm sorry.
we're almost we're an hour and 15 minutes in.
Yeah, we're gonna
already.
end this.
So
We're gonna end this
perhaps
shortly.
time to wrap up.
Yeah, we're gonna wrap this up. So everybody on here, thank you for joining us. We're gonna wrap this up in a few moments. So if if you have questions, by all means, you can listen here. If not, you could always reach out to myself, Tay. You have the whole TCS team. Really, this business is about relationships. And for myself, I really value the relationships that I have with TCS because, for example, I had a question about a property in Pennsylvania, and I was able to get Luis to answer a question for me. These are the valuable relationships that we have. And really, so if you have any questions, feel free to reach out to us. You can find myself, Adam at Levinecapital.com, or shoot me an email, Tay at Levinecapital. Daniel, you can find them. I'll leave. What I'll do is I'm going to send an email to everybody of all our information. So if you have any questions, you could feel free to reach out to any one of us. And again, I just want to say thank you, everybody, for joining us. We're going to be doing these webinars once a month with a topic. If you have a topic that you want us to talk about, please let us know. And I really hope that everybody gained a lot of valuable information on this. And thank you. And I hope everybody stays safe from this. We have some people from the West Coast, but East Coast where we are, we're getting a lot of snow. So again, thank you so much, and we look forward to the relationships that we're building and adding more value to this to our investor community. So again, we're going to sign off, and thanks again, everybody.
Yeah, thank you. Happy holidays, everyone.
Yeah, happy holidays, and have a happy new year.
Thanks, everybody. I appreciate it, Adam and Tay and everybody else. Thank you.
Thank you, everybody. Okay, I'm signing this off.
Yeah, have a good night. Yep.
Yeah. Bye.